The United States is sitting on $36 trillion in debt, a number so big it's almost meaningless. But here's something interesting. The US government also sits on approximately 8,133 tons of gold. At current prices, that's worth around $675 billion. And recently, there's been serious talk from presidential candidates to financial analysts about creating a strategic Bitcoin reserve. So the question everyone's asking is, could the US actually use these assets to make a dent in the debt? Could gold or crypto be the escape hatch from $36 trillion? The answer is more complicated and more interesting than you think, because national debt doesn't work the way personal debt works. And the proposals floating around reveal something important about how governments think about money, power, and what debt actually means. This is the real story behind the gold and crypto debt solution, and why it tells us more about monetary desperation than fiscal responsibility. First, let's understand what we're dealing with. $36 trillion in debt sounds catastrophic. Politicians call it a fiscal time bomb. Economists warn about unsustainable debt levels. Media headlines scream about the crisis. But here's what they don't usually explain. National debt isn't like your credit card debt. When you or I go into debt, we have to pay it back eventually. If we don't, creditors come after us. We lose our house, our car, our assets. There's a final reckoning. Countries, especially countries that control their own currency, don't work that way. The US borrows in dollars, and the US prints dollars. This changes everything. Now, before you say, just print the money, understand that causes inflation. If you print trillions to pay off debt, you destroy the currency's value. Everyone holding dollars gets poorer. It's technically possible, but economically disastrous. So governments have historically used other methods. The main one? Outgrow the debt. If your economy grows faster than your debt, the debt becomes smaller relative to your economy. After World War II, US debt was 119% of GDP, higher than today. But through economic growth and moderate inflation over decades, that ratio dropped to 31% by 1974. The US never paid off that debt. They just made it irrelevant through growth. But here's the problem now. Growth is slowing. Interest payments on the debt are approaching $1 trillion per year, more than the defense budget. And political appetite for raising taxes or cutting spending doesn't exist. So some people are looking for creative solutions, and two ideas keep coming up: gold revaluation and crypto reserves. Let's break down what's actually being proposed and whether any of it makes sense. Here's the gold proposal in its simplest form. The US government owns 8,133 tons of gold, but on the books, it's valued at $42.22 per ounce, a price set in 1973. At current market prices of around $2,000+ per ounce, that gold is actually worth approximately $675 billion. Some proposals suggest the government should revalue this gold to current market prices and use the difference to reduce debt. Sounds clever, right? Just update the accounting, and suddenly you have hundreds of billions. Here's why it doesn't work. Revaluing gold on paper doesn't create real money. It's just accounting. The debt is real money that has to be paid back. You can't pay treasury bondholders with accounting entries. To actually use gold to reduce debt, you'd have to sell it. And if you tried to sell 8,133 tons of gold, that's about 3% of all the gold ever mined in human history, you'd crash the gold market before you sold even a fraction of it. Even if you could sell it all at current prices, $675 billion against $36 trillion is less than 2%. You'd barely make a dent. But there's a more radical version of this proposal. Revalue gold to an absurdly high price, say $20,000 or $50,000 per ounce. At $50,000 per ounce, US gold reserves would be worth $16 trillion on paper. That's almost half the debt. This is what some gold enthusiasts propose. Just declare gold is worth more, revalue the reserves, and boom, debt problem solved. Except this creates more problems than it solves. If you arbitrarily set gold at $50,000 per ounce, you're essentially creating inflation by fiat. You're saying dollars are worth less because we say so. This destroys confidence in the currency, triggers capital flight, and potentially collapses the dollar's reserve currency status. Which brings us to the real reason these proposals exist. They're not serious economic policy. They're signaling devices. They're ways of saying, we're so desperate, we'll consider anything. And that desperation is also behind the crypto proposals. In 2024, Donald Trump proposed something unprecedented, a strategic Bitcoin reserve for the United States. The idea is modeled after the Strategic Petroleum Reserve, the government stockpile of oil meant to buffer against supply shocks. But instead of oil, it would be Bitcoin. The proposal varies depending on who's talking about it, but the general concept is the U.S. government should accumulate Bitcoin, either by purchasing it, seizing it from criminals, or accepting it for taxes, and hold it as a reserve asset that could appreciate and potentially offset debt. Some versions suggest buying 1 million Bitcoin. At current prices around $40,000 to $100,000 per Bitcoin, prices fluctuate wildly, that would cost $40 to $100 billion to acquire. Proponents argue that if Bitcoin continues to appreciate, this investment could grow to trillions and meaningfully reduce debt. Let's examine whether this makes sense. First, the upside case. Bitcoin has appreciated massively since its creation. Someone who bought $1 billion in Bitcoin in 2015 would have tens of billions today. If the US bought heavily now and Bitcoin went to $1 million per coin, as some advocates predict, then yes, the government could make trillions. But here are the problems. 1. Timing risk. Bitcoin has had multiple 70–80% crashes. What if the government buys at $100,000 and it crashes to $20,000? Taxpayers just lost $80 billion. 2. Market impact. If the US government announced that it was buying 1 million Bitcoin, the price would spike instantly. You'd be buying at inflated prices because your own announcement moved the market. 3. Volatility. National reserves are supposed to be stable. The Strategic Petroleum Reserve works because oil has relatively predictable value. Bitcoin can swing 30% in a week. That's not stability, that's speculation. 4. Philosophical contradiction. Bitcoin was created specifically to exist outside government control. The entire ethos is be your own bank, don't trust the government. If the US government becomes the largest Bitcoin holder, that undermines the fundamental premise of Bitcoin. 5. The debt scale problem. Even if everything goes perfectly and Bitcoin 10x's, you're talking about turning $100 billion into $1 trillion. That's still only 3% of the $36 trillion. It's not a solution, it's a rounding error. But here's what's really interesting about the Bitcoin reserve proposal. It's not really about solving the debt. It's about two other things. First, political signaling. Supporting Bitcoin appeals to a specific voter demographic, young, tech-savvy, anti-establishment. Proposing a Bitcoin reserve signals, I understand the future, and I'm not like traditional politicians. Second, acknowledging reality. The fact that serious people are proposing this means they're admitting traditional solutions, raising taxes or cutting spending, are politically impossible. So they're searching for magical thinking, assets that will just appreciate and solve our problems without hard choices. So if gold revaluation is accounting tricks and Bitcoin reserves are speculation, how do countries actually deal with massive debt? History gives us a few proven methods. Method 1. Inflate it away. This is the most common approach. If you have $10 trillion in debt and you create 5% annual inflation for 20 years, the real value of that debt gets cut in half. Bondholders get paid back in dollars that are worth less. It's a hidden tax on savers and creditors. The US did this after World War II. Debt was 119% of GDP in 1946. By keeping interest rates artificially low, below inflation for years, the real value of the debt shrank. Bondholders lost money in real terms, but gradually, without a crisis. This is probably what's happening now, by the way. Inflation has been above interest rates for several years. The debt is being quietly inflated away. It's not dramatic or newsworthy, so nobody talks about it, but that's the actual debt reduction strategy. Method 2, outgrow it. If your economy grows faster than your debt, the problem shrinks. If you have $10 trillion in debt, but your economy grows from $20 trillion to $40 trillion, that debt went from 50% of GDP to 25%, much more manageable. This requires productivity growth, technological innovation, and smart economic policy. It's slow but sustainable. Method 3. Default. Just don't pay. This is what Argentina has done multiple times, what Russia did in 1998, what Greece almost did in 2010. The U.S. has never defaulted, and probably never will, because U.S. debt is denominated in dollars that the U.S. prints. But default would destroy America's credit rating, spike borrowing costs, trigger a global financial crisis, and end the dollar's reserve currency status. The economic damage would be catastrophic. Method 4. Restructure. Negotiate with creditors to take a haircut, accept less than full repayment. This is what heavily indebted poor countries have done. But the U.S. doesn't need to do this because it controls its own currency. Notice what's missing from this list? Selling gold, Bitcoin reserves, gimmicks, because those aren't how sovereign debt actually works. So why are serious people proposing gold revaluation and Bitcoin reserves if they don't actually solve the problem? Because we're running out of traditional options, and that's the real story here. For decades, the U.S. had fiscal space. When debt got uncomfortable, we could raise taxes a bit, cut spending a bit, and grow our way out. The political system could handle it. That's breaking down. Raising taxes is politically toxic. Cutting spending means cutting Social Security, Medicare, defense, all politically untouchable. Growth is slowing due to demographics and productivity challenges. So we're left with monetary solutions. Keep interest rates low, inflate the debt away slowly, and hope nothing breaks. But there's anxiety about this plan. What if inflation gets out of control? What if a crisis forces interest rates up? What if the dollar loses its reserve currency status? That's where the desperation proposals come from. Gold revaluation and crypto reserves are Hail Mary passes. They're ways of saying, maybe there's a secret escape hatch we haven't tried. The truth is simpler and more sobering. There's no escape hatch. National debt at this scale gets managed through decades of slow, boring work. Moderate inflation, gradual growth, responsible fiscal policy when possible. The alternative, the one nobody wants to acknowledge, is that at some point the math stops working. Debt service becomes so large it crowds out everything else. Growth stagnates under the weight, and you get a crisis that forces dramatic, painful adjustments. We're not there yet. The U.S. still has advantages. The dollar is still the global reserve currency. U.S. Treasury bonds are still considered the safest asset in the world, and the American economy is still the most dynamic large economy. But the window is closing, and the fact that people are seriously discussing gold revaluation and Bitcoin reserves tells you something important. The conventional playbook isn't working anymore, and nobody knows what comes next. Could the U.S. use gold or crypto to reduce $36 trillion in debt? Technically, theoretically, in very limited ways, yes. Practically, meaningfully, at scale, no. These proposals aren't solutions. They're symptoms. Symptoms of a political system that can't make hard choices and an economic model running out of easy answers. The real debt reduction is happening quietly through inflation and hopefully growth. Everything else is noise. If this changed how you think about national debt and monetary gimmicks, hit subscribe. We cut through the hype to show you how money and power actually work. Drop a comment. Do you think the U.S. debt is a real crisis or manageable? And share this with someone who needs to understand why gold and crypto aren't magic solutions, because understanding what won't work is the first step to recognizing what might. I'll see you in the next one.